What's up, guys? Welcome back to another episode of Blondes Building Equity. This one's exciting for Jess and I because we both have dove head deep into two multi-million-dollar Airbnbs, and it has been way more challenging than we were expecting. So today we have an Airbnb specialist. We have Tony J. Robinson, and he has $12 million in Airbnb. So if anybody's thought about Airbnb, I know it's super hyped right now. So this is going to be the guy. He's going to answer all of our questions and give us the inside scoop on Airbnb. So welcome to the podcast.
Ladies, I appreciate you having me. I'm super excited to chat, and I love that we're having this conversation while you're inside of your own Airbnb. So this is like super full circle right there.
Yeah, welcome to our Airbnb right now, guys.
The thing with our Airbnb is we didn't plan to do Airbnb, but it's just been sitting on the market. So we had to get really creative. So we started doing Airbnb. So we realized it wasn't as easy as we thought it was. How did you kind of get started with Airbnb?
Yeah, I'm so glad you said that first, that it wasn't as easy as you thought it was, because I feel like I've heard that statement from so many people. So, outside of being a real estate investor, I'm also a podcaster, and I'm the co-host for the Bigger Pockets Real Estate Rookie podcast. And through that show, I meet a lot of people, who are like at the beginning of their journey. And here's the crazy thing about the Airbnb space. Over the last, I'd say like 2 years, it was almost like the gold rush, where there were so many investors who saw people making a ton of money and were like, hey, I'm gonna go do this thing and I'm gonna crush it. And it was way more than what they anticipated, because buying an Airbnb, even though it's still real estate, is dramatically different than owning and operating a long-term rental, right? Mm-hmm. I got started in long-term rental space, and that was easy. That was like a cakewalk. It's like you have one person, they're there for a year, 2 years, 10 years, sometimes 20 years, and they're low maintenance. When you have an Airbnb, we'll have, our properties turn 12 to 15 times per month. We'll have, 2 people sometimes. We'll have 16 people at the property in one stay. Yeah. So the level of involvement is dramatically different. So I don't mean to go off on a tangent to begin with, but, I'm just so glad you said that, because I think so many people underestimated how much work goes into this thing.
Right. And I don't know if it's the same with your properties, but we haven't, maybe it's just our area, but we haven't really made so much more than what we could rent it out for. So I guess I'm trying to understand, is that different from area to area, or why can't we thought we would do Airbnb and make like, a couple thousand more than what we could rent it out for, but it's kind of doesn't even hit that number sometimes.
Because it's not consistent. And I think what we've really seen is like, it's a science. So I would love to pick your brain on this, because if you get a 3-day booking on the weekend, then you have Friday, Saturday, Sunday booked. Most of the time, then that whole week thing is going to be empty, because most people want the full week or the weekend. So we were booking like these high price weekend people. And then we were like, oh my gosh, we're free most of our weekdays. So it was hard. So we were like, do we not want to accept these little weekend books? Because we want someone to come in for the full week, for the 2 weeks. Because if the weekend's booked, they're not going to come just for 5 days on the weekday.
Yeah.
Let me ask a question. And sorry, I want to get back to the question you asked me about how I got started in this space. But I'm, just based on what you just said, are your weekends booking out every single weekend? Like, are you booked every weekend?
Yeah.
Then you guys should increase your prices. Increase your prices on the weekend, and then decrease your prices during the weekdays. So we charge, like we use a pricing tool, right, to manage all of our pricing, and it's going to spit out a number that it wants us to charge on Friday and Saturday. But we add an additional 15% to whatever our pricing tool tells us to charge on the weekends. Because same for us, we're booking out every weekend. And that middle of the week, especially like Tuesday, Wednesday time frame, it's so hard to book. So we discount those days even further. So we charge a little bit less during the week to try and get those days filled, but then we maximize our weekend bookings because people are always going to stay during the weekend.
Right. And I actually made the mistake of doing smart pricing when we first started, because we were new. Yeah. And I was like, I want to get some good reviews. I want to be booked out. And she kept saying, we need to increase it. And I was like, no, Airbnb is telling me like, I need to price it at this. I priced it way too low because of smart pricing. And we got booked out the whole month, and like
booked the whole month, but it wasn't going to cover anything, because it was booked the whole month in five minutes. And I was like, this is a bad time,
Something's wrong. Yeah. So here's the thing, right? Like Airbnb is incentivized to make its product cheaper than hotels, right? That when Airbnb first got its start, that was the whole thing, right? Like it was cheaper to book an Airbnb than it was to book a hotel. And what's happened over the last couple of years is that as Airbnb has gained more popularity and professional investors have come onto the platform, they're like, hold up, we can charge a little bit more than what we were initially thinking we could charge. So Airbnb's incentive is to always try and decrease the cost per night for its guests. And the way Airbnb makes more money is they increase the number of properties on the platform. So Airbnb's in the volume game. They want the lowest priced properties with the largest number of listings on the platform. So if you go with Airbnb smart pricing, they're always going to underprice you, always.
Right.
Okay, that makes so much sense.
We're a few years into this journey. I started off in the long-term rental space. I live in California. I'm like in the suburbs of LA. And I bought my first rental property in fall of 2019. And it was a long-term rental in the city of Shreveport, Louisiana. Do you guys know Shreveport? Have you guys ever heard of Shreveport, Louisiana?
No.
Most people haven't. It's a small state in Louisiana, or a small city in the state of Louisiana. And my mom actually ended up retiring there, and I went to go visit her, and I was like, man, I think I could buy some property out here. So long story short, we ended up buying like 4 long-term rentals out there. And we were making like, I don't know, $100 to $200 per month per property.
Right.
And at the time I was still working my day job, and, you know, I had a healthy 6-figure salary, and just kind of doing the math, I was like, it is going to take me forever to replace this 6-figure income with, you know, $100 to $200 per month per property. So I said, okay, what is something that I can do that will allow me to replace my income faster? And, you know, I did a bunch of research and I tried some other things, but we eventually ended up buying our first short-term rental, actually during COVID. And we bought that property in Tennessee, in the Smoky Mountains area of Tennessee. And that first property did so phenomenally well that we were hooked. And after that first one, we bought a second one a few months later, bought our third one a month after that. And we just, in 2020. So we bought our first one in the middle of COVID. Wow. So it was a crazy time to buy a vacation rental, but it really ended up being our best investment.
I heard that Airbnb during COVID didn't do as well, or is that the opposite?
So it depends on when you're talking about, right? So when COVID first hit in March, a lot of properties just shut down, right? Like cities said, we're not allowing any customers, no one can book your properties whatsoever. So if you had a property in March, you were probably eating that mortgage for a month or two. But once a lot of those initial restrictions lifted, which is when we bought ours, that's when people were like, well, we're stuck in our home. We want to go somewhere. We don't want to go to a hotel because we don't want to share, the space with everybody else. If we go book an Airbnb, now we've got some privacy to ourselves. So we took our first listing live in August of 2020. So COVID had been around for a little bit already, but those initial kind of restrictions had already lifted a little bit.
I remember in August of 2020, that was the time where I was like, I travel so much and I was dying to travel. So I ended up going on a road trip with my girlfriends in August of 2020. So that was probably right when the point where people were like, get me the heck out of the house. Let me stay in an Airbnb. Maybe I can't get on a flight, but I'll road trip to an Airbnb, do something to change up the pace. So
that makes sense.
And so so that was in Tennessee, and kind of where have you scaled now in the past 2.5 years then?
Yeah. So where are we at? Yeah, we're coming up. Yeah, I guess about 2.5. Or what year are we in? We're in 2023. Yeah, coming up on 3 years now. Yeah. So like I said, we bought that first one in Tennessee at the Smoky Mountains National Park. We were right in Pigeon Forge, which is a city outside that national park. And we said, well, man, if this one's doing so well, are there any other national parks we can invest nearby? And me being in California, like Joshua Tree was in our backyard. So we bought our second one in Joshua Tree. We bought our third one in Joshua Tree. And we're up to about 30 listings right now. We've got those split between Tennessee and Joshua Tree. And we've got a campground under contract in West Virginia. And we've got a few properties under contract in Branson, Missouri right now as well.
Wait, you have a campground under contract? You can buy a campground?
Yeah. So we bought a campground, or we're in the process of buying it. But yeah, we hope to close on that in about a month or so.
I actually was just at a campground. My family's super into camping, but RV camping. And I was at this campground by the beach. And my parents, like, because it's by the beach, it's just, you pull in your RV. They have hookups, but that's it. It's like literally a slot with hookups. And they're paying $300 a night. And so me and my boyfriend are walking around counting the slots, like looking at there. And we're like, okay, wow, their cash flow. Yeah. I mean, the land was crazy but we were like, whoa. I don't know how the equity build is. I guess land does have equity build, but I was like, this could be a really low maintenance, cash flowing, investment. So I was like, we were doing the math, and my family's enjoying their vacation, and I'm over here counting campsites.
But who owns? I thought the government or the city owns like campsite. No, really?
You like buy land?
No, yeah.
Oh,
Yeah.
does it have to be like zoned for camping or something, or do you make it zoned?
It has to be. It has to be zoned for commercial use, and this land was already zoned for that purpose. So it's actually a really weird property. Someone reached out to me on Instagram and said, "Hey, Tony, I've got this random off-market deal if you're interested." And I'm a, I don't know if you guys like, but in Black culture, camping isn't really a thing. So I've never really camped myself. So I don't even really know much about like camping or RV parks, but we looked at this property and it had RV pads. It had a bunch of tent sites, and it also had a church, which was crazy. And anyway, it had all this extra space. So we ended up looking at it, and the numbers kind of worked out. And our plan with the property long term is to build out unique stays. So we want to build campsites, but they'll be domes. They'll be geodesic domes that have really cool decks and hot tubs and things like that. So
okay, awesome. So when will the domes be finished?
So we're supposed to close in that property sometime in April, I want to say, and it'll probably take us anywhere between like 6 to 9 months to build them all out. We're going to do it in phases. So in that first phase, we're looking to build 6 of them.
When I was looking into the domes, they have these amazing ones. You just order prefab, they boom come set up, ready, built, and made. And I was like, that was awesome. Save a lot of time.
Yeah. So they're not necessarily prefab. It's like a kit. So you still have to hire someone to kind of build out the decking and get all that engineered and then put the domes up on top of it. But yeah, there's a company that's based in, I think, Oregon that's well known for building those tents. So we're going to be using those.
What's it called, the company?
Pacific Domes.
Nice. Wow.
Yeah.
So now, okay, so you have all these Airbnbs. What has been your favorite?
Ooh, which one has been my favorite? That's a good question. I mean, we've had so many now, but I think from we like to do cool themes for our properties in Joshua Tree, just kind of make them stand out. And I'd say the ones that I like the most, we have 2 properties that are next door to each other, and we thought it'd be cool to do like a kind of a contrasting theme. So we have one that's called the 70s house, and it's got like this really cool retro 70s design, and the property next door is called the 90s house, and that one's got like a really cool retro 90s design. So I think those 2 from like a design and kind of experience perspective are my favorite.
Do you ever get to stay there yourself?
Not often enough. We usually stay when we're setting them up, like when we set up those initial ones, me and my wife stayed there for like a week, get everything up and ready. But now, no, usually they're almost always booked. So it's hard for us to kind of make enough time for ourselves.
Wow, but that's awesome that you're almost like all booked, because we've just heard so many things now about Airbnb being oversaturated. I saw actually something on Instagram that said during the Super Bowl weekend in Arizona, actually 50% of the Airbnbs were still not booked. And I was like, that's crazy, because there's Waste Management and Super Bowl. You would expect it to be booked. So you don't feel like it's oversaturated. You're still getting bookings.
Yeah, I mean, I'll definitely say that we are anticipating 2023 to be a down year over 2022, right? And I think there's a lot more than just a number of listings that are impacting that. Like if you just look at the economy as a whole right now, you're seeing all these massive layoffs in the tech industry and all these other industries. And I think people are just naturally tightening their belts. And whenever that happens, you're going to see people spend less on vacations. And I think that's a risk that you have to live with as someone who is investing in this space, is that you are more subject to the kind of ebbs and flows of the economy. If you buy a long-term rental, you're not as impacted by that. But anytime your business is built on discretionary spending, if there's less discretionary spending, it means it's less revenue for you. But the way that I've always kind of positioned that in my own mind is that, companies like Marriott and Hilton, they've survived how many recessions, right? And they're still here, they're still growing. And on the other side of every recession, the economy tends to get stronger. So we're just doing our best to kind of weather the storm over the next year or so. And, our property is still profitable, which is good. We still make sure that we're buying right, we're operating right. So it's not like we're losing money every single month on our properties. But, we know that once we get through this, we'll have a good property or a good business long term.
How do you get like recession proof, kind of? Like, what do you do to get prepared for that?
I think first is the quality of your property. Okay.
Right.
There's so many people that put up ugly properties on Airbnb, and then they're shocked as to, you know, "Hey, why am I not making money?" And I think if you do simple things like really investing in your design, really investing in your amenities, really investing in your customer service, those things by themselves will set you apart. Even little things like, you know, I see so many people who even don't even invest the money to take professional photos, and there's like poorly framed photos with the iPhone and terrible lighting, and it's like, that is such a small expense. You know, it's a few $100 to get professional photos, but you don't even want to do that. So I think if you want to continue to compete, you have to look, okay, what's the top 10% of my market? If you look at, you know, all the listings in my market, look at the top 10%. What are the things that those listings are doing, and what are the things that I should be replicating in my listing when I go live? So for example, this campground that we have under contract in West Virginia, you know, I was out there a couple weeks ago, and we drove by a bunch of other campgrounds, you know, peeked inside, see what they had going on. We looked at almost every other listing that we could find. We stayed at an Airbnb while we were out there, just doing as much kind of competitive research as we could to see what are the best performing properties and what are they doing. And we felt extremely confident to say, not only can we match what those other listings are doing, but we can beat them. So I think it's this level of competitive research to understand what are people doing and can you compete at that same level?
Right. How do you know what the top 10% is? Is there like do you use AirDNA?
Yeah, there's a bunch of tools out there. So AirDNA is a big one. Price Labs is another big one. All of those tools allow you to see revenue, projected revenue for other listings, and you can use that data. So typically what I'll do, like say I'm looking to buy a 3-bedroom and you guys are in what, West Hollywood, you said? Yeah. Say I'm looking to buy a 3-bedroom in West Hollywood. I'm going to open up AirDNA, I'm going to open up Price Labs. I'm going to filter down to 3 bedrooms in West Hollywood. I'm going to sort it by most revenue to least revenue. And I'm just going to start clicking through those listings. And I'm going to see like, hey, what does the design look like? What does the construction look like? What do the amenities look like? What do the reviews look like? What are the reviews saying? And once you do that for enough listings, you're going to kind of pick up a sense for what people want in that market.
Wow, I love that. So you have to treat it like a business if you want it to be successful during this time. It can't just be like a side hobby or little passion project. It needs to be like a full business.
Yeah.
I'm so glad you said that, because that is exactly what I tell people, is that when you get into this space, you have to make the decision yourself. Is this a hobby or is it a business? And different people have different goals, right? Some people buy Airbnbs because they just want a beach house, or they want a lake house, or they want a house that they can ski out of, and they don't really care if it's going to make money or not. And if that's your goal, then you're going to approach it totally differently than someone who's saying, my goal is to maximize revenue and treat this as a business. So I think it is an important discussion you have to have with yourself first.
Yeah, and I mean, so it's been a common theme on this podcast. Obviously, the recession is looming, so I'm glad that you are like hunkering down and preparing for that. And so the good news is, though, that something really that motivated me the other day talking to a mentor is, the great news is recessions last 2 to 3 years, and the expansion phases last 8. So, you know, if you can get through this, the good side is always better. That building side is always better. But do you have any plans for buying? What is your plan? I know you're hunkering down on the Airbnb, but are you going to take advantage of the deals on the market?
Yeah, I mean, we're definitely still looking for deals. We just closed on a property. Our last like active short-term rental we closed on right at the end of the year. We just closed on another rehab yesterday. So we're still actively buying properties, but we are definitely being more conservative, and we're buying at a slower rate than we were before. In 2021, and even most of 2022, we were buying 1 to 2 properties a month. You know, so it's like we were like on a tear, and we've definitely slowed down so far this year. So I think you do have to be patient. But the good thing about where we're at in this market cycle is that there are less people hunting for those deals. So there's less competition. And now we have more leverage as buyers, right? In 2021, people were putting out crazy deals. It's like, hey, I'm going 100K over asking, no contingencies. I'm going to give you my firstborn child and like whatever else you want from me, right? And now it's like you have leverage as a buyer to say, look, this thing came up in the inspection. I want a credit for this much. And if you don't want to accept it, then I'm going to go look for the next deal. Right. And, you know, the deal that we just closed on yesterday, we got that deal for almost $100,000 less than what it was originally listed for. So that's kind of the benefit of buying in this market.
I think the only thing that's scary is you don't know what to account for the price adjustment for how low we may get. So you can take like account for, okay, well, maybe, you know, drop 15% in the housing market, but what if we do drop more than that and you haven't accounted for that, and then you kind of just lose all that equity build or everything you thought you would you would have in that property.
Yeah, so let me ask you this, right? If you're buying a property as a rental, whether long term or short term, does a decrease in equity impact your cash flow?
No, but the thing is, right now, interest rates are so high, it's really hard to actually cash flow when you're locking in a 7% interest to be able to get over that, at least in California.
Yeah, I think in our price range,
you can't do that.
it's
you
hard
know?
to cash
One
flow.
of the person we had yesterday on the podcast, or some last week, was like, that's why I don't invest in California.
Yeah.
Like, it's so hard to cash
We
flow.
have the equity build a lot of times, but it's
Yeah.
like the cash flow isn't, it's barely there ever. And the cap rate is barely there.
Yeah. So yeah, I guess two things to comment on, right? It's for us, if we're buying a property and we know we're going to hold it for 5, 10, 20, 30 years, we're not as concerned about the ups and downs in the appraised value of that property.
Yeah.
Because if the appraised value goes up or it goes down, I don't really care, because I'm focused on what is the cash flow, what is the profits that we're collecting on a monthly basis, right?
Mm-hmm.
So we can live with those ups and downs in the valuation of the properties, because we're not selling today, right? If we're looking to sell, then it might be more difficult, right? And if you're flipping homes, which we also do, you definitely have to be more conservative in what you think you can sell it for. But if you're holding that property, it doesn't really matter what the ups and downs are of the valuation of that property. The second thing you mentioned about yeah, go ahead.
As long as you can rent it out for more. You're like, if I can make a positive
Exactly.
cash flow, this is a good deal.
Yeah. And that's how we're looking at it, right? Like you guys mentioned, interest rates are higher, and they are, and it is more difficult to find good deals. But if you find a good deal, as interest rates are high, why wouldn't you buy it? Why wouldn't you move forward with it? Because if interest rates go up, you'll be glad you bought at a 7 when interest rates are at an 8, right? And if interest rates go down, now you're taking this deal you bought at a 7, you refinance it at a 6, and it's an even better deal. So
And
we're still
your cash flow
buying
at a
deals.
7, we're going to cash flow at a 6.
Yeah.
Right.
Do you think interest rates are going to go up anymore? I know you're not a future. What's your
Yeah, I'm definitely not the smartest guy in the room, and when it comes to interest rates and kind of where they're going, I try and lean on people that are way smarter than me to get their opinion. And I'm actually really good friends with one of our mortgage guys, and we probably will see interest rates tick up a little bit, through the next couple of quarters here. But eventually, we probably will see them soften. Right, we can already see the economy starting to slow down a little bit, which is the Fed's goal, and kind of raising rates as they have. So we probably will see it tick up. But again, we're being cautious in our buying philosophy. So even if they go up, we're just going to underwrite with that new interest rate. And if it makes sense, we buy it. If it doesn't make sense, then we won't.
Right.
Right.
Add that into the equation.
And so for you, we've just noticed the big investment to get an Airbnb started. So obviously ours were flips, they're on the market, so we're like, let's make them Airbnbs in the meantime. But we weren't really expecting, obviously, the amount that goes in it. The paper towels, the soap, the furniture.
The permit application.
Yeah, getting them approved,
Yeah.
it's such a hefty upfront cost. And so what's kind of your formula to know that fixed cost? Then when are you looking for a cash flow positive?
Yeah. So in terms of kind of projecting the cost, here's it's a little bit labor intensive, but here's like a really easy way to get a good handle on that, right?
Okay.
So say that you're looking at buying like a 3-bedroom in West Hollywood, right?
Okay.
Go on Amazon and think about everything you would need to buy and just fill up your cart. Right. If you have 3 bedrooms, you're going to need 3 mattresses. You're going to need 3 sets of sheets and linens for every single bed. You're going to need towels. You're going to need, paper towels. Just take it all, throw it into your cart, and you'll see, okay, this is how much I would probably end up spending if I had to set this property up. To get the design piece, that's going to vary pretty wildly from person to person, because some people are, super luxury with how they want to design their properties. Other people are, I want to go the economy route. So my recommendation would be, you could hire a professional and say like, hey, look, I'm looking at buying a 3-bedroom in West Hollywood. How much do you think I need to spend? Most good designers can give you a ballpark on that number. Or do the same thing. If you want to design it yourself, go to Article, go to Wayfair, go to wherever you want to go, and just fill up your cart and see what that kind of ballpark number comes out to as well.
Right.
And so because now, okay, if this is going to be $30,000 to furnish it, to get everything started, or what have you, or maybe $20,000. So that means how it's going to take you maybe a year or two to be cash flow positive. Is that normal, or what do you kind of expect on that end?
Yeah, so every investor kind of has different targets when it comes to cash on cash return.
Yeah.
And our best deal, that first cabin that we bought, we had a 138% cash on cash return in the first year that we owned it. So we spent $65,000 all in to buy that property. So that was down payment, closing costs, all the little furnishing things we had to update. 65K all in, and we grossed 156 and netted like 84 that first year. So that was like best deal we've ever done, right?
Yeah.
Best deal hands down we've ever done. And that isn't normal, right? But I'd say our baseline for deals in our business is at least a 30% cash on cash return. So, if we put up $100,000, we want to net at least $30,000 that first year. So, a little over 2 years to get us paid back.
I don't know if it's just another California thing, but the crackdown on Airbnb from the cities has been immense. Yeah. For us, even in West Hollywood, we're actually not allowed to do short-term rental. It has to be 30 days plus. Yeah. So we are... So we can't rolling the dice right now, but our property, they needed like literally our firstborn child to complete this application.
I mean, it's still not even approved, and we've done so much.
It's been crazy.
But is it like that everywhere? Or is it just California?
Every major industry you can think of has some level of regulation, right? Okay. If I am, say I want to create a car company, right? And I want to start selling new brands of cars. Think about all the hoops you have to jump through to legally sell a car, right? Even if I want to be a street vendor and sell food on the side of the road, I have to go out and I have to get a license to do that, right? So from the most capital intensive businesses down to the least capital intensive businesses, you almost always need some kind of permanent regulation to operate legally. And the Airbnb space, because it grew so quickly, a lot of cities just couldn't keep up, right? Like people were throwing these properties up faster than the cities could react. So there was a lot of gray area in terms of how Airbnbs could operate because the cities in these counties couldn't keep up. What we're seeing now is that a lot of these cities have had the time to kind of assess the impact, to kind of assess where they stand. And you're seeing different cities make different decisions. There's a city in New York, Ithaca, New York. Last year, they passed a new short-term rental ordinance. Before that ordinance passed, if you had a property in Ithaca, New York, you could rent it out 365 days a year, right? There was no restrictions. After the ordinance passed, if you were lakefront, you could only rent your property out something like 240 days a year. If you were not lakefront, you could only rent your property out 29 days out of the year. So imagine if you had a property, and you could only rent it out for 29 days out of the year. So every city is going to react differently. Now, another city, Big Bear Lake in California, where the three of us are, residents tried to severely limit how Airbnbs could operate in that city this past fall. And there was a ballot measure that said, hey, we're going to try and ban Airbnbs. And it got rejected because people understood that in Big Bear Lake, California, the number one biggest driver of revenue in that city is what? It's the vacation rentals. Right, so if you turn off Airbnbs in a city like Big Bear Lake, what are the local businesses going to do? How are they going to get people into their doors? So whenever we are searching for cities to invest in, one of the things we always look at is what is the economic dependency of that city on short-term rentals. I would probably never buy a property in Los Angeles, right? Like I'm 45 minutes from LA. I'll probably never buy an Airbnb there because think about LA. They have universities, they have business headquarters, they have film, they have television, they have music. They like any major industry you can think of exists in LA. If you turned off Airbnbs, does LA care? Is LA at all significantly impacted? Right. No, not at all.
It's
a drop in the bucket.
Because the neighbors, they're like, I own a $3 million house. I don't want an Airbnb next to me.
Exactly. Exactly. So we specifically look for cities that are economically dependent on the revenue that short-term rentals generate.
Wow, I never really thought about that as like the strategy. See, there's just so much that goes into it. Do you have like a course or something that people can take?
Yeah, I do. It's called Alpha Host Academy. We're actually in our beta phase right now. So we just launched it a few months ago. So we're still ramping up. So if people want more about that, you guys can go to alphahostacademy.com or just DM me the word mentor on Instagram.
No, that would be so helpful. Because I mean, even what I'm learning right now with you today, it changes your business strategy going into it. And if you really want to go forward.
Do you ever do Airbnb arbitrage? I know that was also like a really, really big thing. Online, everybody was doing the arbitrage, and I just couldn't really 100% get behind it on our mindset, but
I'm curious. Why do you say you guys can get behind it? And I'll kind of share my thoughts after.
Well, I mean, obviously it's a great if you have no money down, but I just feel like with the equity build in real estate, that's obviously a lot of our first priority. We want to own something and build over a long period of time, but also like really the liability of taking on these leases when you don't own it and things like that.
Yeah, so it really comes down to what everyone's goal is. And if your goal is cash flow and you want to scale as quickly as possible, arbitrage is definitely a faster route, right? Like, buying 30 properties, that's millions of dollars that we've had to put out to buy those properties, right? And had we taken that same couple $1,000,000 and put it into arbitrage, that would be significantly more units because, an arbitrage unit, I know some people that are setting those up for like $3,000 to $5,000, right? Which is crazy.
But I would be so nervous, like you set one up and imagine in a year lease is over and they're like, sorry, we're done. You're out, and then you have to move that furniture, redo another place. It's not on your terms.
Yeah, and that's a big part of the reason why we opted to not go that route initially. Because for us, one of the things we wanted was obviously cash flow, but we also wanted equity. And, we became millionaires in like a year because we were buying all these properties and the equity buildup it was crazy, right? And that wouldn't have happened if we were doing arbitrage. So we wanted the equity, we wanted the cash flow. We also wanted the tax benefits, right? Like when you buy a property, you can do cost segregation. There's all these other things you can do to offset all of that income that you're generating, whereas arbitrage is more active income. So we haven't done arbitrage yet for a lot of those reasons. But I will say now that we've kind of built up this portfolio of all of our own short-term rentals, our kind of the next phase of our business is getting more into the co-hosting space and the arbitrage space because we already have the infrastructure. So now it's like, okay, let's just add some more units on top of it.
Right.
So co-hosting, is this you going to clients and saying, I can Airbnb your spot and do everything for you? What would you charge for that service?
So we're probably going to charge somewhere around 20% of gross revenue for that, which is honestly pretty reasonable. There are some people in the space that are charging like 40% and not even doing a good job with it. So that we'll charge somewhere between 20 and 25% for our clients.
Okay, because that's something that I was thinking about doing. Both of us is like, because we kind of did it successfully with the house that we have on the market now, we still do showings, we still do open houses, and then we try to fill it up strategically as much as we can while still trying to sell it. And we know there's a lot of properties in our area that are just sitting on the market. So we're like, why don't we try to poach them and say, hey, we already kind of got it down what we need to do. We have like all of the tools that we need to get started. We have the communication that we need to have. So why don't we just do this for you, run it for you? We have all the cleaning crew and everything, and then we'll just charge a fee. But we weren't sure what to charge.
Yeah. I mean, it's really whatever the client is willing to accept. There are lots of people out there right now who are giving their property managers 40%, right? But I think it's the value prop that you bring. The only thing that we're going to do, that we're going to be very selective or picky about is kind of clients that we bring on, right? It's like if the property is not going to do a certain revenue number, we're not going to take it on. If the client wants to also be the operator and kind of tell us how to do our job, we're not going to take that person on, right? Like we want to work with people that have properties that are going to do a significant amount of revenue and owners that trust us enough to kind of get out of our way and let us do what we're supposed to do,
Right.
That would be hard though, because I feel like before I hosted Airbnb, I never understood the amount that the host takes on. Literally, Jess gets calls at 9 p.m. at night, at all hours of the night. Like for our West Hollywood property, like they expect, especially because it's higher end, we're at $650 a night. So it's like they are crazy. If the sheets aren't ironed, they want a refund. So I'm like, I don't know if somebody hasn't hosted Airbnb that they would really know what you're undertaking. They'd probably be like, oh, your job is easy, because that's kind of what I thought. It wasn't that hard. And then I'm like, whoa. This is actually crazy. You have a new tenant every 3 days, and they all have different needs, and they all have some kind of complaint always.
I guess you could approach them, though, and this is what I was thinking, just having a PowerPoint and being like, okay, you can go different routes with this. We could go the route of like, you can book it 3 nights, and we don't have to have the long-term route. Or we could do like they can only book it week in, week out. And I feel like that would be more revenue and not as much headache, the week stays versus the two days, the 3 days. So I feel like if I say like, okay, we can do the 2-3 days ones and like maximize your revenue, but that's a lot more work. Or we could say week only, then I'm not going to have to do as much work.
Do you ever do that week only stays?
No, we don't have minimum night stay. I mean, we do have some minimum night stays, but usually we allow people to stay as little as one night, you know, but most of our stays on average are somewhere between 2 days in Joshua Tree and a little bit longer in our bigger properties in Tennessee.
Right.
Yeah,
because you limit yourself if you're like only doing a week stay, even though those are the best.
Totally.
Yeah.
But there are some people that don't want the headache of having a different guest checking in every couple of days, you know, and I think as we scale our co-hosting business, those are the kind of people that we're looking for that jumped into the Airbnb space and are now overwhelmed or burned out by the work. And it's easier to let those people understand how much work goes into it because they just tapped out from doing that same job.
I wonder what the revenue would be like compared to someone that just lets you book one night all the way up to a month versus someone that only allows you to do week to week.
Yeah,
like I wonder what that would be, because even if you just book out like 2 weeks straight, that's still 14 days, and that's kind of like that's like pretty good if you're doing day to day or 2 days at a time. 14 to 15 days is pretty good in a month to get booked out. But I wonder.
And there's always. Yeah, it's a balancing act, right? Like you're trying to balance how much am I charging per night versus how many days of the month am I booked? And you want to try and maximize both of those numbers. And what we typically do with our pricing strategy, and we just hired a few VAs to take on our pricing for us, so we've been kind of training them on how to do this, is we want to maximize revenue further out. Right. So if you're booking 30, 45 days out, we want to charge you more. And as you get closer to that date, we're going to try and charge less. And our goal is to always get to 100% occupancy over a rolling 7-day period. So if I look out over the next 7 days, we always want all of our properties to be either 83 or to 100% booked on that 7-day window. So we're going to get really aggressive if it's a week out, and we'll be a little less aggressive, you know, for further out.
Wow. So you actually charge more if someone books ahead of time.
Absolutely. Right. Because think about the people who are booking further out, like they're
like as us, you know, when you plan a vacation, like you always think you want to do it ahead of time.
But proud to fill that room, you're like, oh, hey, somebody, this is going to be an empty room, so take it. Wow.
So then you lower it to try to get people in. Wow. So last minute deal, our thing on Airbnb.
Okay.
Wow, I like that.
Wow, this has been really, really great. And we are really navigating this space. So I appreciate your time so much. Is there any final thing that you'd like to leave with the audience? Like maybe one last tip of advice. If you were getting starting fresh, what would you do different?
Yeah, if, you know, not even just for me, but I think for anyone that's looking to get started in this space or any part of real estate investing, there's really, I guess, 3 things you need. You need some type of community. Because for new investors that are starting out, it is so lonely sometimes to kind of go, you know, it's like the Matrix, right? Where like your eyes open up to this brand new world, but you're the only person that's going on that journey, and you try and talk to your friends or your family and no one understands. You're like, what's cash on cash return? What do you mean? Like no one gets it, right? So I think finding that community is super important. And that's why podcasts like this, I think, are so helpful because it helps build that community. So that's the first piece is the community. Second is the education piece. Yeah. I think, there's so much free content out there, podcasts, YouTube channel, social media profiles. Just like start consuming as much as you can. Like train your algorithm on TikTok, Instagram, whatever, to start feeding you more content about real estate investing. But there's also a fine line there, right? Because I think a lot of people get into that analysis paralysis phase where they overeducate and they use that as an excuse to not take action. So the thing I always tell new investors is if you get to the point where the majority of what you're learning are things that you already know or things that you've already heard, then it's probably a sign that you're ready to take action. So like if you guys are listening to this podcast and you're like, man, I already knew that. Man, I knew that too. You know, I've heard that somewhere before too. Yeah. If that's what you're saying to yourself, then it's a sign that it's time for you to actually take action. So community, education, and the last thing I say is accountability. If you can find someone to, and not, you know, it doesn't have to be like, you know, joining a coaching program, even if it's just like you and your friend and you tell your friend like, hey, look, I want to analyze 10 deals this month. And he's like, I want to analyze 10 deals this month. Then just check in with each other and say, hey, how are things going? Hey, I did 5 today. You did 6. Like, where are we at? Find someone to hold you accountable. Totally.
I love that.
So I think you check those 3 boxes. It makes it easy for you.
Wow, this has been so helpful. We really appreciate having you on, and fun timing too, now that we've done Airbnb for the first time, to get like a specialist on.
Yeah.
Awesome. Well, we appreciate it so much. I know you're close to LA, but if you ever need anything, we're here as a friend.
Awesome. Well, thank you so much. It was great meeting you, and we will be in touch.